The Hang Seng that's managing to hold on to gains of 2% in trade.
NTPC Green Energy a few days back had filed a DRHP with SEBI.
40 hourly exponential moving average, which is about 25,586.
The metal index is something you keep on your radar.
You know, the 5 is maybe a little bit too high, so they made a big step to get it close to what they think it might be.
China has announced a slew of measures which can be positive for the metal stocks.
25,920. 0.07% change.
We still see a very strong earnings growth story coming out of specific sectors within the Indian economy.
Just because today they are smaller, they're able to sustain some of these growth metrics as well as profitability metrics.
Obviously, our NIMS has been pretty strong at about 830 basis points.
1.8 lakh crore rupees. Now that is the cumulative loss made by individual traders.
So close to 26,000 yet so far.
Roughly 40% of our portfolio is into the broader financials.
17 points higher on the Nifty. We've seen a lot of fluctuations today.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and it has been a positive day in the green. Metals clearly are the leader, and on the downside, there is FMCG, which is sulking a little bit, but otherwise not really very much to complain at all. Markets drifting up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Hi guys, afternoon. So we were almost there, I think about 6-7 points away from the mark. Now there's momentum building up again. Yeah. Europe is positive. So what do you say? Is it happening today?
It's happening today.
Prashant? I always do that. I love doing this.
It's happening today. The Nifty Financial Services Index will play out the weekly expiry. So there'll be some contracts that'll move. Then the one that's not performing as of now is the Nifty Bank. So it just needs, Nifty Bank needs to go up 100 points and we're there.
Okay, so you're saying 26,000.
Well, then it is done. It's looking up 40 right now. So 25,975 and slow drift higher. Banks are actually absolutely flat, so not very much. Will 26,000 matter in any way, even as a sort of small bit psychological resistance? We'll see. We've not really even tested that. But the pace recently, of course, has been pretty fast over the last 3 or 4 sessions specifically. That's the distance to the 26,000 level, just 30 points. Now, you've got to look at metals, which are up. The index is up about 2.5%. And that's a big talking point. Nigel will talk more about that. I can say a big thank you to what's happened in China. I think a lot of European markets and European metal stocks are also jumping on the back of what's happening in China. Just looking at some of the rates. FMCG, I think, is the only large index which is down. There are others lower as well, but nothing in size. FMCG may be just cooling it a little bit more than anything else. Surabhi.
Yeah, absolutely. I'm looking at those European screens right now, and some of the markets, like, for instance, the French market is really surging away, 1.5% up on that one. But even for us here, the mid-cap story has been strong and robust, and the mid-cap market's now tracking a gain of about 1%. The advanced decline ratio is pretty much neck to neck today, so that's an interesting aspect of trade. But yeah, I mean, metals, it's not just about a Tata Steel or Hindalco. Even if you go beyond and look at some of the other names, beyond the Nifty 50, that's where the biggest chunk of the gains are really coming through on stocks like, Vedanta, 4% higher. Last I checked, even Nalco was flying around. So, the entire metal complex is very, very excited because of the measures that we've seen in China. And then beyond the metal names in the mid-cap market, we've got a lot of interesting stocks in focus. Look at Paytm, 5% higher. Look at First Source, where there's an acquisition, small 40 million pound acquisition that they've done. Stocks in news about 6% higher. There is Schneider Electric, 11% on the upside. Epigral, lots and lots of names. V2 Retail, lots of names on the upside. I think the market overall is feeling quite okay, quite optimistic. And barring this a little bit of profit taking in FMCG, like Prashant mentioned, nothing that's really to find fault with.
Even the insurance companies actually have come in for some profit taking. SBI Life, HDFC Life, and both of those companies, you have the Nifty Bank and then you have the Nifty Financial Services Index. The Nifty Financial Services Index also has these components. NBFCs, they also have the the insurance companies. So the Nifty Financial Services Index is at the low point of the day. If it can try to move into the green, that's what will help the Nifty get closer. And just take a look at the broader markets. A couple of stocks just bucking the trend. Post some brokerage notes. Here's Axis Securities that came out with a note on Arvind Smart Spaces, the stock that we had covered just yesterday on Bazaar. It was seeing a fair bit of delivery-based buying. That one's up close to around 15%. I'm guessing it's on the back of that note that came in from Axis Securities. Very, very high volumes, now up close to around 19%. And the other one is Sh Kelkar. You have Kotak that's come out with a note on that one. And that as well is up close to around 15%. So that's sort of a market where, these brokerage notes are making the difference. 17% now as we speak. But let's focus on the headline index because the markets were trying to make that move towards 26,000 odd and we cooled off a little bit. Mitesh Thakkar is back with us. Hi Mitesh, good afternoon. Good to see you in. What's the view on the Nifty from here on? I guess you need to just trail your stop loss and hold on to your long position. Tell us, what's the call?
I think that's the very logical way of doing it, Nigel. But, I would also suggest maybe, taking about 1/3 position off the table and add it back if we see a break beyond 26,000. See, the one reason is that obviously it's a psychologically important number. It's a round figure. Two, there's a lot of call open interest around crore shares at 26,000. So in that sense, I think, dropping some positions over here, looking for a 100-point decline and then re-entering could be a good idea. Or you buy once the spot Nifty is about 26,000, 30, 40 levels and then take it from there. But the idea is that the position should be clearly on the long side. Having said that, I think metals is a sector, which is doing extremely well and that's where the action is. Hindalco is something on my radar. I think it's just breaking into fresh highs. Disclaimer that I have some call positions over here, so there's vested interest. But a breakout into fresh highs can always see good follow through. So keep a tight stop at about 704. And we'll look for a target of 740 to begin with. Maybe eventually even higher levels can be tested. And that about, I think, Coforge is from IT Pack. It didn't correct when the IT sector was correct. Coforge is again picking up strength. So buy here with a stop below 6910 and target of 7,200.
Got that. All right. Thanks a lot for that, Mitesh. We'll come back to you as the show progresses. But let's focus on the sector of the day, which is metals. China has announced a slew of measures which can be positive for metals companies. Well, they say that the PBOC will cut the reserve requirement ratio, which is the RRR for banks, by 50 basis points. But they've stopped short of giving the exact or the specific timeline for this cut. Also, they've hinted at another cut of around 20 to 25 basis points on the RRR before the end of this year. There were also a few more highlights that came out. They'll be cutting rates on the existing mortgage loans. They'll cut the 7-day reverse repo rate by around 20 basis points from around 1.7% to around 1.5%. And they'll also cut down the minimum down payment ratio for the second home to around 15%, which compares with around 25%. Phillip Capital, they have come out with their reading of the situation. They maintain their positive stance on metals. The top picks from the ferrous space, JSW Steel as well as JSPL. From the non-ferrous space, it's Nalco as well as Vedanta. They've also recommended accumulating NMDC as well as SAIL, but both those two in a staggered manner. I was also looking at a note coming in from HSBC, and they're saying at current prices and current reckoning, well, only 5% of the Chinese producers, steel producers, are making money as of now. And as we put out this piece a couple of weeks ago, normally when there is plenty of pessimism on demand, on pricing, suddenly the cycle does turn around. It seems, at least as of now, that seems to have happened. Well, we have Sudeep Bantupadhyay, the Group Chairman, IndiTrade Capital, who joins us on the show. Hi, Sudeep. It's a tricky one. Just a short while back, I think at the start of September, everyone was saying that we're seeing too many imports coming into India. Exports are not quite picking up. Chinese steel prices were at the lowest we've seen since pre-COVID levels. And yes, the benefit of lower coking coal costs was there. But the problem was with iron ore prices falling, it wasn't giving any kind of base to steel prices. What's your view on the metals pack and what do you like, ferrous or non-ferrous?
Well, Nigel, I think if China actually goes ahead with all these stimulus measures which have been talked about, I think this is definitely good news for the entire metal pack. US has started cutting rates, and that's a very good starting point as far as metal rally is concerned. The challenge was the problems in China, and there were big problems. And if China's stimulus measures do work, I think it'll be good news for the metals. Now, amongst ferrous and non-ferrous, I do like things like aluminium and other metals where the use case is continuously increasing with the adoption of EV and the modern gadgets. People have started using and preferring more and more aluminium and related products as opposed to iron and steel. And this is a structural change, I believe, and that's the reason why I have been recommending investment in say Nalco, Hindalco, even Vedanta. I think this makes tremendous sense. Yes, this particular rally, assuming Chinese stimulus is on, will cover pretty much all the metal stocks. But if I have to focus on long term, I will focus on aluminium.
Aluminium, so that would be your pick. And you'd play that via Hindalco itself, or would you look at Nalco?
I will look at Surabhi, Hindalco, Nalco, as well as Vedanta. I think all three can be looked at. There's no harm.
All right, got that. Sudeep, thanks for that call. So I want to look at some stocks that are flying around in the mid-cap market as well. And one of the names that really catches the eye, Sudeep, is Paytm today. It's up around 5%, and actually it's not been a bad month. I mean, this month it's up about 10-11%. So there's some sort of, bottom fishing that's going on. But I don't know, do you see anything on the horizon here that merits a fresh entry?
Well, I'm a little cautious, Surabhi, here. They are talking about doing a lot of things, and they are reapplying for the payments aggregator license, which is all good news. But today, the main business is loan syndication. I think that's the principal source of revenue as well. We'll have to see what transpires and how things unfold going forward. At this stage, the valuation definitely is rich, and I don't think I will recommend entry at these levels. There are excitement based on a lot of news flows, but I would advise investors to be cautious here.
Okay, advise investors to be cautious here. Markets up 44, so just sort of holding, just under that level of 26,000, not very far away from that level though. Some of the stuff is just reversal from yesterday, so I don't think one should make too much of it. So Amber went up 13% yesterday. Today it is down 6%. It's the second biggest volume-led loser. SBFC went up 20% yesterday. It is down 7% today. I mean, this just feels like, pullbacks or reversals, maybe a little too much yesterday and then a little bit down right now. Stovecraft is something which we were talking about yesterday as well. It's down 5%, 890 on Stovecraft. Bharti Hexacom is another big mover on the downside. It's down about 5.5. Mind you, market breadth is almost nearly 1:1 in terms of advanced decline. The one which has kept going lower is Fusion Microfinance. It's down another 9%. Stocks at about 250. Remember, the last quarterly earnings was when trouble first emerged at Fusion Microfinance, and they essentially said that NPLs had jumped, and there were a lot of talk that maybe there was sort of evergreening of loans, and now, of course, there have been. And it was at that point, I remember lots of people saying that second quarter is going to be pretty bad, but I think now things seem to be a little worse off with the latest disclosures, etc. Stocks are about 250. The high was about 600 on this one. This is a private equity-owned microfinance company, by the way. Just a quick word, Sudeep, if you track this one, ever owned it, Fusion?
Well, definitely there is a lot of bad news as far as this stock is concerned. You're absolutely right. First quarter itself was bad, but the recent announcement that the second quarter ECL expectation is significantly higher definitely has shaken the confidence of the investors here. The management and the investors in this particular company have also taken necessary steps of announcement of a fresh infusion of capital and induction of a CEO to streamline the management and other processes. So things probably will fall in place going forward. But as things stand today, I think it's a bit of an uncertain scenario. And one has to see the Q2 results, which actually comes out post the audit, sometimes towards the end of October. We'll have to see that. As far as overall microfinance industry is concerned, there's a bit of a stress as far as asset quality is concerned. But our belief is that post the Q2, the festive season is setting in, and things have started looking up in the rural economy. Rural income has started increasing. So as far as asset quality is concerned, things should start improving from Q3 onwards. That's our reading of the scenario. Of course, the fundamental issue of over leverage amongst the borrowers is definitely a genuine concern, and that has to be seen how that pans out. But otherwise, structurally, things are going to look up from Q3 onwards.
Okay, so perhaps things get better for microfinance lenders in the second half, towards the end of the year. Take that point. By the way, there's a nice move in a lot of the frontline IT stocks right now. It's something that you really can't ignore. Tech Mahindra, HCL Tech, LTI Mindtree, all these stocks had a far more modest start, but now they're building on some of the gain and the momentum. And the likes of LTI Mindtree trying very hard to actually break into the green side of the screen. Look at that build up on Tech Mahindra. Looking quite smart. There's HCL Tech, there's Infosys, Wipro, TCS. It's an across-the-board move on IT. That's LTI Mindtree trying very hard to now join its peers on the green side of the screen. So, interesting take on a lot of the frontline IT names. Sudeep, how do you find the IT stocks? I mean, there's been a fair amount of move towards them already for obvious reasons. Cash rich, provide safety, and the whole portfolio churn that we've started seeing. But given that many of these stocks, the frontline ones at least, are already close to 52-week highs, would you still take a further exposure? What's the advice?
Well, if you're a long-term investor, there is absolutely no harm. I think, most sectors and most stocks, as far as Indian market is concerned, is near all-time highs or have already touched and crossed all-time highs. IT sector was subdued for a very long time on the back of a fear of US recession. But I think the US recession is not there. There is a soft landing which is happening in US. And large Indian IT companies who were, a couple of quarters back losing orders, there were postponement of orders, and all kind of unfavorable things which were happening. I think it's a matter of past. Things have started looking up from their point of view as far as US business is concerned. And remember, for most of them, US business is either 50% plus or close to that. So under the circumstances, US economy remaining robust is good news for them. And they will continue to give an decent return and reward shareholders. As far as the mid-cap and small-cap IT companies are concerned, we have been recommending investors to be very specific and focused on sectors and companies which are catering to sectors which are in an upswing. So let's say travel and tourism worldwide is an upswing. So you focus on companies which are catering to travel and tourism. So a RateGain Technologies, Proforge, I'm just giving a few names. These can be looked at. The auto industry, there is, massive technology adoption happening. So, IT companies who are assisting or a part of that process, let's say Persistent, Tata Technologies, and some of the other companies, focus on those companies because they have a long runway.
Got that, and good points you make there. By the way, guess what is the biggest volume-led gainer on the NSE today is Firstsource with that 6% pop. At number 2 position is a near 8,000 rupees stock. So look, and it's got the second highest amount of volume. I'm talking about AstraZeneca, 70 at 40. Stocks actually rising even more. It's up 16% now. That is a big move which is coming through. And it's started now. I think almost all the gains have come in the last 4 minutes or so of trade. Yeah, look at that. It was actually absolutely flat. Stock was at about 70, not all of it, I beg your pardon. It was trading at about 7,500. Yesterday's close is 6,750. And then from 6,500, it's gone... from 7,500, it's gone to 7,800 in a big move, and it's got volumes on it. We don't see this usually at all. Quite something. We'll come back to this one and probably pose this to Sudeep for a quick view, but just a few other sort of brokerage names which we want to highlight. MK has initiated coverage with a buy call on GMR Power. Vivek is here with highlights. Vivek.
Well, that's a very interesting note from GMR, from MK on GMR Par. Also, they've initiated coverage on the stock. They have a buy rating and they have a target price of close to 180 rupees a share. What is it that they're saying? They're saying that number one, the core thermal business is actually doing quite well and it's nearing optimal performance. What are the key triggers there? Coal tie-ups, PPAs to the tune of 90% of the total capacity, and also improving debt metrics. Now, this is regarding the thermal power portfolio. What they are also saying is that the hydropower portfolio, that is the Bajoli Holy 1800 megawatt of power plant, that also has largely stabilized. And the third vertical is the smart metering vertical. Over there too, they believe that the 7.5 million smart metering installation contract opens up a lucrative asset-light business opportunity with Bosch. Along with that, there's improvement as far as the balance sheet is concerned. Clear focus on deleveraging on the back of strong operating cash flows. Deleveraging has also been aided by the conversion of FCCBs into equity and the handover of the Hyderabad-Vijayawada road project. So they're expecting, net debt to drop by almost 4,000 crore rupees to 9,000 crore in this year itself. And they see further upside potential from incremental smart meter contracts, monetization, as well as settlement of disputes. And they believe these provide significant and sizable optional value. No wonder then the stock pushed at the upper circuit throughout the day.
Okay, got it. That's GMR Power and Urban Infra. Some more stocks that are flying around on the back of brokerage notes. Kotak Institutional Equities has reinitiated coverage on Sh Kelkar. They have a buy rating. We have Sonal joining in with the details. Look at the stock flying in 16%. So the market really loves what Kotak is saying. Tell us what the note has, Sonal.
Well, a lot of growth levers is what Kotak likes for this particular counter. The fair value or the target price that they have on the stock is around 400 rupees a share. They see a long runway for growth given established and sticky relationships and execution possibilities that they have with the existing clients. Additionally, they are also seeing growing footprint in Europe, US and Southeast Asia as well. So export also continues to be a big pie for them in terms of growth. Now, there are high entry barriers. This belongs to flavors and fragrance industry, and that makes it a good candidate for growth going forward and to place a bet on as well. They also see potential for margin expansion, which will be driven by high margin geographies, which is Europe. Second is their operating leverage and also strong cash flows, given it is a business model light on fixed assets. So that is why the margin expansion possibilities are more. Looking at a CAGR of 12% in revenue, 17% in EBITDA and 28% in EPS over the next 3 financial years. They recently won a large order from the FMCG giant, that is Unilever. And that's what makes Kotak very confident on this name. The management has been guiding for a 12% growth rate going forward in future years. There are risks, however, because it's a discretionary segment. Any slowdown in economies is something which would hit discretionary segment first up, and that is something they're worried about. Second would be any execution problems if they have with these bigger clients that they have entered into or bigger geographies that they have entered into. So these could be the risks, but overall, considering the track record, they're quite bullish on this name.
All right, got it. So that's Kotak sounding very, very upbeat on Sh Kelkar, target price of 400 on the stock. By the way, on AstraZeneca, the stock that Prashant just picked out, which is soaring 16%, just to put the news in context as well, they have now gotten permission from the Government of India, from the Central Agency, which is the Central Drug Standards Organization, for the import of a pretty important cancer drug. And it seems that that drug has a sizable market, and it could be, of course, more beneficial for AstraZeneca. Now that they have the official permission for more import, sale and distribution here in India. So that's AstraZeneca as well. So lots of stocks moving around on either news or brokerage notes. So Sudeep, take your pick from Sh Kelkar to AstraZeneca to some of the other names. Any thoughts in case you track any of them?
Sh Kelkar, Survi, has been one of our favorite stocks since it's got listed. I think it's in a niche business and very strong customer relationships. And these are not something where there is somebody new can enter. So there are significant entry barriers. So this is something which one likes. And of course, with the FMCG industry expanding and getting into newer areas, the scope for the servicing by Sh Kelkar in terms of the fragrances and flavors also is increasing. So I think this is a good business. But one has to remember, and I must say that this is a long-term business. So, yes, it has gone up based on one research report today. But if you are investing in it, be in it for the long term and it will reward you.
Okay. I mean, by the way, so the market hit 26,000. I mean, it went like, unnoticed. It had a big candle. I mean, actually, you'll see that. I mean, actually very unusual. it just zoomed past. The high has been made at 26,011. And just like that, I mean, very quickly, it's fallen back to exactly where it was, which is 26,970 or so. So there was this one zip higher. And then, of course, we are now back under it equally quickly where we started. So, but we are, I mean, you know, we've touched 26,000 and that's done now. So that's in the bag in that sense, and we can look ahead at other kind of levels, etc. It'll be interesting whether, you know, we are able to stay above it, or as Mitesh was talking, or I was saying earlier, you know, this is something which the market wants to, around here is where the market wants to find some amount of, wants to spend some time around that. You know, some of the stocks which have done very well in this last 1,000-point journey, as we always do, will come up at the bottom of the screen, and I think we'll have, you know, our team join us with some of that stuff over the next 30-odd minutes that the markets are going to be trading for. So just before 3 o'clock, 26,000 in the bag.
So like when you don't hold your breath for it too much and don't count down too much, well, it's when it quietly happens. We were looking at all the stocks that were flying around.
Yeah.
And just around that time, we hit that mark of 26,000. The reason we're seeing profit taking is that some of the stocks like Lever, for instance, I mean, they're playing a bit of a spoiler. Down to 2.5%. Some of the banks are also cooling off from the earlier levels like Kotak, IndusInd, Axis. So the banks are not exactly playing ball. It's a rally which is, but having said that, look at HDFC Bank. I mean, that's still batting for the bulls, still retaining a gain of about 0.7%, which is why you still got sort of fair amount of gain, 180 points up on the screen. And it has been looking good. And this last 1,000-point move, Prashant, has been interesting as well, right? Because in the last leg, we've finally seen some sector rotation. Otherwise, it would always be the same PSUs that we speak of, the same set of stocks. But now we've seen a little bit of that rotation. Money coming back to financials, money coming back to IT stocks, which have also done well. In fact, just to talk about some of the, you know, the better performing parts of the market, if you look at sectorally speaking, some of the sort of best performing sectors of the last 3 to 4 weeks gone by. So consumer is right up there. In the month of September, it is actually the Nifty consumption index, which has rallied 7%. There's a consumer durables index. Realty continues its forward march. Nothing has changed on the real estate story. But financials, private banks, and the Nifty bank itself, which have been missing from the party for so long, they've started to come back and participate. And so we have a bit of a, you know, for what it's worth, a bit of a new leadership to this milestone of 26,000. In fact, I think we can go to Hormaz now, right? He's been churning the numbers and the data for us. So, Hormaz, take it away. Mount 26,000.
Will it, won't it? All through the day, there was this suspense building up, right? And finally, the mark of 26,000 eventually happening on the financial services expiry day. 38 sessions then, from 25 to 26,000. We hit 25 for the first time on the 1st of August. So, it's taken 38 trading sessions then. And since then, we've moved. So let's take a look at the top contributors then. And as you were mentioning, right, just a few minutes back about sector rotation taking place and the names that have come up. And this last 1,000 points, of course, have happened from the September of 11 that we have moved higher. Look at this. Bajaj Auto, Shriram Finance, Bharti Airtel, Bajaj Finserv and Hero MotoCorp. Among the top movers in percentage terms, yes, Bajaj Auto continuing to move from one high to another. And even Bharti Airtel has come up here, as has Hero MotoCorp. But take a look at the underperformers, and they are the ones that have not participated in this rally. The best performing stock on the Nifty in 2023 is the worst performing stock in this 1,000-point rally. This Tata Motors is down 16%. And the PSUs, the high-flying PSUs, have been featuring in this list of underperformers, be the likes of ONGC and SBI. But a big catalyst of this 1,000-point move has been the rush seen in the banks. The Nifty Bank has been the lead contributor here. And as of closing yesterday, the Nifty Bank was up for 8 days in a row, and 3,000 points is what the index has gained, and that shows up in the Nifty moves as well that we have seen from the 11th of September. And take a look at the big movers in the Nifty Bank as well. And underperforming Bandhan Bank is the top performer in these last 8 sessions from the 11th of September. And look at this, HDFC Bank and ICICI Bank, the two big heavyweights on the Nifty Bank, on the Nifty as well, 7% each, and that shows up on the price as well. Interestingly, it was the 1st of August when Nifty hit 25,000, and it was the 1st of August when the PSU index made a near-term top as well. And since then, the PSU index is down almost 6.5 to 7%. And take a look at the top losers here. All the top performers, REC, SAIL, Concor, BHEL, LIC, all of them seeing double-digit losses, and 17 out of the 20 index constituents since the 1st of August have delivered negative returns. The only 3 in the positives are Oil India, NTPC, and HPCL. But it is not the story of the PSU underperformance. Today is the day that belongs to the Nifty, and it's been a large cap move over this last month and a half.
Almost, do you remember how many 38 sessions you said, right?
38 sessions, yes.
What were the previous 1,000-point jumps?
The 25,000 took 24 sessions, so it was the third fastest rally. So this has taken a slightly longer time.
And before that? Was it 25? I mean, this is...
38 sounds like a nice, mature number for a change, right? It's not a mad dash, which is what the market was doing in the earlier part of the year. 38 probably... not too bad, like measured.
No, it's in percentage terms, it's 4%, right?
4%. Yeah.
You know, that's the other sort of way to put it. We must look at it like that also. I mean, to go from big difference to go from 20 to 21 as compared to go to 20, yes. 20, not that big a difference. I mean, you know, the point is that percentages become smaller and smaller as you keep going higher. But it's been a pretty good run. Sudeep, you want to weigh in? I think the market now is almost in the red.
Actually cooled off quite a bit. Yeah, 25,000.
I hope we don't pay the price of...
Getting excited.
Sudeep, any thoughts?
No, I think it's good to be a part of this entire journey. And today I'm on screen when it touched 26,000, so I'll remember this. But you know, beyond all that, I think you know, we will keep seeing the market inching upwards. I won't be surprised if we end the year at around 27,000 plus levels. You know, the kind of sheer liquidity support which the market is getting, domestic as well as from FIIs now, I think will propel the market upwards. What we need is definitely more depth of Indian market, which all the new IPOs coming in at the pace at which they are coming does help, and that makes for a healthier market.
And we'll see lots of it. And I think you know, what's also important is to stay in the market, right? Not get stopped out, make some stupid mistakes, get excited and chase something which looks very exciting, and then kind of sort of lose your way. Because, you know, that's the nature of markets. It'll get you excited. It'll get you very worked up. And, you know, you always think the next guy is making more money. So, you know, I must get into something more exciting than what you already know, which may actually eventually be the winner. And I think that's an important sort of lesson, especially, you know, where we are right now. We're not at 10,000, 15,000. We're at 26,000. So the market's done well. Sudeep, thank you very much for joining us. Great speaking with you. Appreciate it. We have Saurabh Gupta, Senior Fund Manager of Equity at Bajaj Finserv Asset Management, who's with us. Saurabh, great to have you with us here. Thank you for your time. I got to ask you for, I don't know if you have any thoughts on a new milestone, 26,000 in the bag this afternoon. What's your sense, Saurabh? More and more opinion seems to be that large caps will now actually start to get a little bit more attention. It's so far been mid and small caps. That should shift. Your thoughts?
No, absolutely. And these milestones are coming fast and how, and more than welcome. But clearly, our view also remains that on a relative scale, large caps are better positioned. In our portfolios also, we are tilting towards large caps. While markets are always heterogeneous, both in large caps or mid and small caps, but to find ideas of conviction at your price where you want to buy, large caps is a place where there is some comfort, a little more comfort than mid and small caps. So yes, tilt is towards large caps, valuation comfort, and we believe large caps should do better from here on compared to the broader markets.
Okay, so large caps are going to do better. That's the expectation. Saurabh, got it. Good afternoon. Good to have you on the show. But what within large caps, right? I mean, I know there's been interest, of course, going back into the consumer space, but it's not been very consistent. You always have a couple of good days followed by, you know, a round of profit taking. Is that a space you would look at now, even though maybe growth rates could be just mid-single digits, going by what most analysts say?
Oh, absolutely. Over the last 2 months, what we have seen is that the clear in equity markets. While market continues to move up, the leaders have clearly changed from capex-driven businesses, government-pushed businesses to consumer names, to pharma names, to IT. And we believe this trend will continue. Often when these type of changes happen, equity markets react first and hopefully earnings follow. If our research is correct, earnings should follow. So our tilt is also very clearly towards consumer names, especially consumer, not on the urban side, but on the rural side. We clearly see rural beneficiaries doing better than urban beneficiaries, urban consumption beneficiaries. We are also bullish on the pharma space. We are clearly increasing our exposure on the pharma space, especially on the CRAM space, which is a new big mega trend that is emerging around us. So we are kind of positioning ourselves over there. And also private banks and insurance companies is a place where we are clearly increasing our overweight exposure right now.
No, and it's interesting. We'll pick on some of these, especially CRAMs, etc., in terms of how to get exposure. Saurabh, stay with us, and we'll just take a quick commercial break here. We're going to come back to you and continue this conversation. I mean, if you're just joining us now, markets hitting 26,000 on the Nifty and then cooling off. We're actually down 2 points on the day. So 25,938 is where we stand at. We're back.
Welcome back. Well, we're still in conversation with Saurabh Gupta, Senior Fund Manager, Equity at Bajaj Finserv Asset Management. The market, by the way, continues its cool off after touching that level of 26,000 on the Nifty. Saurabh, so give us a sense of your portfolios. I mean, you're fairly diversified. You do have financials. You do have a fair play on consumer as well. And then you mentioned some specific plays on the pharma side. So, I mean, for every incremental rupee you have to put in the market now, how would you go about with the breakup? Say for every new 100 rupees you have to put in, how would you break it up across segments and themes?
Sure. So we have been increasing our exposure, as I told, on the banking, on the private banking side. There is a valuation comfort. And finally, the fear of rate cycle reversing is for the for the liability franchise owners was the reason that the banks were not doing well given the MCR linkage they had. Then there was a fear of kind of NIMS pressure. That is now starting to play out, and I think markets have those companies have not participated because of the margin fear. I believe now from here on, incrementally earnings should surprise us on the positive side on the margins for banks, especially the private sector banks. So we are clearly positive on them. And second part is also important on the banking side is that there is again some uptick on unsecured lending, that is NPA, that is happening. That will ensure that the good underwriters, which were ignored for 1.5, 2 years, because the cycle was so good, they will start to get some respect again. So high quality lenders which were not participating in the rally, not getting the valuations that they used to get, I think that's the time that will reverse. So that is one positioning, one incremental exposure that we are adding for sure. Second is consumer staples. As I told, we are getting incrementally more bullish on rural consumption, and the big play on rural consumption is bottom of the pyramid consumer discretionaries or staples. So this is an incremental position that we are adding. Also, insurance companies look good to us with a lot of regulatory hurdles behind us. We believe from here on, there could be some money that can be made on the insurance segment as well. Coming to the pharma question that you had, we are extremely bullish on the mega trend or regulatory changes that are happening in US on the CRAM space, especially the Biosecure Act, which is throwing up a very large opportunity for Indian pharma companies, especially companies operating in the pharma space. Though that opportunity can be really, really large on the smaller molecule side. While it's still kind of firming up, numbers could be 1.5 years away, orders could be 1.5 years away. But incrementally, that is also one thing that we are kind of very, very optimistic about, and we are adding exposures over there right now.
You 13% of your fund, Saurabh, is in pharma, right? And
yes.
Is Divi's the single largest position for you?
Yes, in pharma, yes.
In pharma. Okay, so it's not the generics which it's more very specifically CRAMS as the story.
So
or is it US? Yeah.
US generics is a more of a cyclical uptick story where the pricing pressure is reducing, but we believe that is more of a cyclical story where we can play for some time. But if you are looking for some structural theme where things will play out for next 3-5 years, it is the CRAM space because of Biosecure Act, and it's getting more and more exciting. More and more we talk to companies, try to do channel checks. We believe it's a huge opportunity opening up. It could be potentially best case a $40 billion opportunity. Even if we get half of that over the next 5-6 years, it could be huge. Even the largest of Indian pharma company on CRAM space is $1 billion revenues. So it offers a lot of opportunity. The inquiries have been increasing as we interact with the companies. They tell us, and the order book should start to get firm up in 1.5 years. And I think that's a real structural story that we have in our hand to play around. While US generics is more of a cyclical story, which should play out in 3-6 months.
Okay, interesting, and explains your sort of stance on pharma and why that sector is one of the largest holdings in your FlexiCap fund. Got that. Saurabh, good talking to you today. Thank you very much for joining in, and we look forward to more conversations. With that, let's get back to the market, which actually has had a pretty big bout of volatility after hitting 26,000, sudden reversal. But the Nifty Bank has stopped falling. So for the bulls, they'll have to take heart from that. Look at the immediate rise and then the equally sharp drop that we had. Okay, Nifty Bank actually down about 120 now. So let's see. We've got, I think, Nimesh with us. So let's quickly head across to him and see what the chatter from dealing rooms is like. Nimesh, this is interesting. 26,000 and then a rapid decline. What are you picking up?
It's not very surprising that at record highs, you will see some bit of profit booking coming in. But again, this whole rally in the last couple of weeks has been largely backed by FI buying, and that seems to be the trend today as well. So another day of very strong FI buying, and the flows is the feedback. And within that, it's the metals which are well bid today. That explains the metal index up 3%. A lot of metal stocks are buzzing in trade. And remember, this is one sector which is relatively under-owned by the institutions. So looks like, on the back of that China stimulus, there is a bit of interest back in the metal stocks in today's market. I guess overall the sector rotation continues. So a bit of profit booking in financials after what we saw in yesterday's sales. Some of the PSUs were buzzing in trade, and on the other hand, a lot of the metal limbs are buzzing, a lot of other stocks are buzzing as well. So looks like the sector churn continues, but the broader theme seems to be that the large caps are likely to outperform the broader market stocks like. So that's been the trend, and this large cap outperformance is largely on back of institutional buying. So as I said, again, another day of very strong buy interest and largely towards the metal names today.
Okay, Nimesh, in terms of individual stock chatter, what are you picking up?
Well, Prashant, looks like before the earnings season kicks in, some last leg of blocks are likely to happen very soon. We saw a large block today, car trade, nearly 9% equity got change hands. The stock recovered from the day's low after the block deal, but in terms of buyers and sellers, looks like the PE was a seller in today's block, and then domestic mutual fund was an anchor in the block as well. So again, disclosures will be quite interesting there. The second name is 5-Star Finance. As I said, looks like some large blocks are going to happen. 5-Star Finance is a stock to watch. The stock has been consolidating off late, but I understand that could be a very large block deal in 5-Star Finance very soon. The PE investor is a likely seller there. That's the buzz. The third name is SW Solar. That's been buzzing off late. The company has been bagging large orders as well. In fact, one large international order is something which series has been anticipating. But now I understand even in SW Solar there could be a large block. Potentially a promoter entity could be a seller in that block deal. And the last is GAIL. A bit of interest is back in the PSUs of late. We saw a big rally in the metal names today. Even some other PSUs are buzzing. But GAIL stands out largely on back of large FI buying. So the delivery volumes are going to be quite high. And looks like the FI interest is back in some select PSUs, and GAIL stands out on back of buy flows.
Nimesh, that SW Solar is interesting because you're saying a promoter entity. Shapoorji is the promoter entity, and the other one group company which is coming up with an IPO is Afcons, right?
Yes.
And there was expectation that perhaps would take care of all the sort of debt, etc. here, but this is, go on.
Yeah, so you're right, Prashant. For SW Solar, that's the indication that the promoter entity is looking to sell a small block and do a fundraising via block deal. So the promoter entity is the likely seller in that SW Solar block. And as you rightly pointed out, the other group company is also coming out with an IPO. So I mean I think that will suffice the funding requirement for the Shapoorji group.
Okay, all right, and of course that order, the Nigerian order, market's been waiting for a while. And as Nimesh said, there is still, I guess, in transit. When it comes, we don't know, but that's the material one. 664, and that's SW Solar. Markets are absolutely flat, 5-point change, 25,943. We take a break, we are back, and we'll get you more sort of trades, and we'll kind of wrap up the day as well, which is 10 or 15 minutes to go for market closing.
Welcome back. Well, it's been a volatile afternoon for the market with now the Nifty struggling to hold on to the green side of the screen. Mitesh is back with us for some final calls. Mitesh, what did you, make of the roller coaster ride? Last half an hour, so much going on. What's the final advice and trades?
So, we was talking about this, that book some profits and this 26,000 should come into play for two reasons. One, it's a round number. Two, there's some 96, 97 lakh open interest on the call side over there. So there was a chance that you will see some profit booking. As we approach the expiry, yes, we might cross it, but I think there might be a couple of hours of volatility. So you might get fresh entry at lower levels, or you buy about today's high. I think that's the idea. On the stock side, capital goods stocks have come into focus. I have a BTST on ABB. Keep a stop below 80.55. Look for targets of 81.25 and Siemens as well. That's a BTST. Keep a stop below 75 here and look for targets of 71.30.
Okay, all right. Got it, Mitesh. Thank you very much for that. You have a good rest of the day and we'll connect with you tomorrow morning with all the market action. Let's put the spotlight on one stock that's really been knocked out quite hard today, even before the market volatility hit us. And this is IEX. Stock has been down between 10 and 12%. Now, government sources are indicating that market coupling for power exchanges could actually be a reality and it could happen. Remember, this is a mechanism by which there is sort of one uniform price across all exchanges, the way it happens in the equity segment, and the price remains the same irrespective of what exchange you're trading on. So it's something like that coming through for power exchanges as well. We have Vivek joining in with the details. Vivek, this issue has been sort of surrounding the stock and the company for a long time, for months now. So what is the latest and what's the market concern?
That's right. So, let's start off with what, Abhimanyu has picked up. Number one, like you said, he said they are looking at market coupling, and they've also said that it's going to be difficult to ascribe a timeline to market coupling. Now, let's take into account all of the developments that have happened in 2024 so far. Number one, remember, CERC actually said that there is need for more evidence-based results before market coupling implementation, and this was said in February 2024. Now, after that, the regulators directed grid operators to run a shadow pilot for 4 months with the software of Grid India. Now, after that, the next development that we heard of was the management talking about it in the Q1 conference call. And what did the management say? The simulations actually did not show any benefits of coupling, and the software is still in development. So if in case there is an implementation, it is still quite some time away. After that, July onwards, you've actually seen a slew of brokerage upgrades coming in as far as IEX is concerned. And one of the key triggers that most of the brokerages have highlighted is that the overhang or the risk of market coupling is actually slowly fading away. Investec, in fact, upgraded the stock to a buy from hold. Axis Capital also upgraded IEX to an add from an earlier sell. UBX very recently, just on September 9th, they upgraded the stock. They raised the target price. What they said was the market coupling overhang, while it has not completely ceased, they believe the likelihood of the implementation is low. And they also see, given the possible regulatory as well as implementation risk, they believe market coupling is unlikely to pose a threat. On the back of all of that, and also aided by very strong volume growth, IEX, the stock has done quite well. 3 months, it's up almost 18%. Last 6 months, it's up 58%. And after today's development, that we put out, Investec actually says that the simulation should show that coupling will be beneficial, which in itself is not quite clear. So if coupling is implemented, will it be beneficial to the sector as a whole is one key question. Number two, they also need to see the other exchanges' reaction on the pricing and also the ability of other exchanges to to go ahead and actually be able to cater to the higher market demand or the higher volumes. So they are quite skeptical about how exactly this will, impact IEX. IFL too has come out with a note today. They are saying market coupling along expected lines could be negative for IEX. In fact, they say that FY26 EPS could see a 26% cut if implemented. But at this point of time, the timelines are still uncertain, and implementation, if it is done, is still quite some time away.
So whether it'll happen or not is not clear, and when it'll happen is also not clear, right? Vivek?
That's right. Both at this point of time, both are uncertain. What we do know is that, shadow pilots are being run, and there have been quite a few delays, in the running of these shadow pilots, and still, the verdict is still not out as to whether it is beneficial or not.
It makes sense or not. Yeah, no, got that. Thank you very much for joining us, Vivek, for that. That's IEX down sharply, 12%, but as he pointed out, it ran up as well. Jay Bala is going to be with us. We'll take a break. He's, of course, with Cash the Chaos, and we talk market levels and technicals. Stay with us.
Okay, well, we have just about 3 minutes to go, so let's get some final perspective with the Jay Bala of Cash the Chaos. Jay, so milestone day for the market, 26,000, but then the sellers came in as well. Your thoughts on how we're poised now here on the Nifty?
Yeah, the Nifty is bullish as long as it stays about 25,334 to 25,285, but it does look stretched and tired. And if it were to drop below 25,334, then only the problems start to surface for the markets. Otherwise, it's okay. The next resistance comes at about 26,300 and then 26,900. But the problem that Nifty and the global markets could be facing is cross assets are at critical inflection points. If you were to see the S&P 500 cash drop below 56.15, then that will be an important trend inflection point. So that will be an important tell. Keep a watch on it. And the Nifty Bank, like I pointed out on the 3rd of September, it's come up to important long-term resistance at 54,000. And I had pointed out the breakout was 51,960 on the 3rd of September. So once it's crossed that, it's now facing a resistance at 54,000. The short-term move is that it looks a bit incomplete. So probably a pullback to about 52,700 and then fresh all-time highs for the Nifty Bank Index.
Okay, so perhaps a pause cannot be ruled out at this point in time. When we talk about the biggest of the big boys on the Nifty, say a Reliance or Lever, I mean, are you getting any clear directional indications? We've discussed banks, but the others, major IT names or Reliance or, like I said, Lever, L&T, any very clear directional cues that you're picking up on, say, the top 5, top 7 weight stocks on the Nifty?
I might be wrong, but Reliance looked weakish for me. The fact that it's come off from 3,200 and change to 2860 in a 5-step fashion, that's a signal that there could be weakness that's persisting, but there are other heavyweights like HUL which are compensating. I think there is still one more high due in some of the heavyweights like HUL. But what is clear in the frontline name is the pharma index that still continues to be bullish. And I have, in fact, one pick for today from Lupin. Lupin is along with a stop loss of about 21.38 for an objective of 24.25. And on a cross-asset basis, sugar 11 in the US futures has had a very strong run. So I anticipate that to trickle down to the Indian markets. Probably Dalmia Bharat, which has a sugar subsidiary, could be a beneficiary. So along there with the stop loss of about 17.94 with the price of 2,400. But most of these stocks are quite stretched and the markets are at an extreme point. Don't do leverage.
Okay, all right. A little bit of a shorter chat today. Jay, thanks for the perspective there, but we're just running into market close, so let's just count down to what's been an interesting session, considering we touched the milestone and then the profit-taking set in. And if we talk about the Nifty, it's going to end with a gain of just about 8 to 9 points, and a lot of that had to do with the commodity-facing stocks, particularly metals. Tata Steel, Hindalco, these are among the top gainers, even ONGC for that matter, JSW Steel. So there's a fair amount of commodity written all over it. Power Grid was the other stock. Some of the positive broker notes, Motilal Oswal, for instance, on the power utility space, sounding very optimistic on this one stock as well. That worked well for it. There was Tech Mahindra, HCL Tech, Wipro, some of the IT names ensured that we don't entirely collapse into the red. That was the upside of the screen. But then the downside, SBI Life, HUL, Grasim, Ultratech Cement. These are some of the poorer performers. And then you have the likes of Kotak, HDFC Life, Hero MotoCipla. So it's really, trends are all over the place. Hard to summarize. But the bank Nifty has ended with a 0.25% cut. So can't take away from that. Kind of that day, Prashant, we got to the milestone, but then the cool off.
For the lack of a better comparison, like a Mallu wedding.
How so?
It's blink and miss. You should ask me. Anyway, up 26,000 and then just kind of came off very, very quickly. So quickly, and the dash was so quick and fast that one really had to go back and see whether we hit 26, and we had hit 26. I think at about 26,011 is the day's high. The new all-time high, I should put it that way. 25,950 is the final close. It's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thank you very much for watching. Markets Forward will